Nina Skero is Chief Executive at the Consultancy Center for Economics and Business Research, joining us now. Hello, Nina. Let's start with the US. Consumer prices up 0.4% in August, which is more than expected. Inflation also up. Is this the impact of tariffs at play?
A part of this will absolutely be the impact of tariffs, with businesses basically passing off the higher fees they're having to pay on to consumers. So I think it's difficult to say exactly how much of it's tariffs, but some of it definitely is.
You know, many US companies stocked up on imports ahead of those tariffs. Inevitably, those stocks are going to run out. What can we expect of prices going forward?
Well, the thinking at the moment, and certainly thinking of the Fed and by a lot of commentators, is that the impact of the tariffs hasn't been as severe in terms of a price shock as feared, but it certainly hasn't been zero. So as you say, there is a lot of data pointing to stockpiling. That is only a very near-term fix. And even those companies that have stockpiled inputs could have already raised their end prices in preparation of the fact that they know that sort of those stockpiles will only last so long. So I think that's a very, very short-term sort of cushioning effect.
Yeah. Let's move across to Europe. The European Central Bank keeping rates unchanged. Inflation remains as well, 1.9%, I think. What's your outlook for Europe, especially given some fairly big challenges? We just have to look at France, for example, and their budget problem.
That's right. We're not expecting any changes at the ECB until the end of this year. But of course, that could change depending on a few factors. So one big factor is the U.S. tariffs. We're still yet to see what the impact of those will be in terms of inflation. Certainly, there's some upside risk to inflation from that, but it is a very murky picture. There is also a line of thinking that some secondary impacts from U.S. inflation from U.S. tariffs, could actually be deflationary in Europe if there is a lot of goods from other countries that were initially destined for the U.S. but will now be coming to the European market instead. So it's a very difficult picture in terms of tariffs. So that's one area we're closely looking at. And the other one is what's happening domestically in some of the biggest member countries, particularly France, and if the ECB will judge that it needs to support the economy with more interest rate hikes. But at the moment, they're making the judgment that despite those risks, the economy is strong enough that they can keep the course.
If we look at what consumers can expect, both sides of the Atlantic, do you think that they must buckle up for higher inflation, higher prices in the longer term?
If we look at the U.S. first, so I do think consumers still have some higher inflation figures coming their way, so that will definitely be a factor. Just as concerningly, and we've heard from the Fed that this is actually their main focus, is what's happening in the labor market. We're seeing some real signs of cracks beginning to emerge in terms of the labor market strength in the U.S., and you could have those two factors coinciding: higher prices, a weaker labor market. So if you're a household that's impacted by both of those elements, it could be a quite difficult outlook. In terms of Europe, the impact of tariffs and on prices is a little bit harder to say. Certainly so far it hasn't been as bad as some have feared, and there is a possibility that things will stay that way. So perhaps a little bit more of a muted risk profile.
Well, thank you so much for speaking to us, Nina Skero, Chief Executive at the Consultancy Center for Economics and Business Research.